Good evening, everyone. You're tuned into Business Day right here on ET Now. I'm Avan Dabash. Well, let's get in a glimpse as to how the markets panned out this Friday before we take you through the top headlines. Well, a stellar day of trade led largely by the banking stocks as well as high beta. In terms of the market breadth, it too managed to stabilize and we conquered some fairly crucial levels on the upside. So for the Nifty, it was 6,074, higher by a good 1%. It was largely in the afternoon trade that we witnessed the up move after a fairly quiet start. So for the Sensex too, it raised its you saw a good gain coming up higher by 180 points almost at 20,103. We keep you up to speed with all of the top stories after the headlines. Maruti's third quarter profit more than doubles to over 500 crore rupees for the first time in 18 months. A strong demand for diesel cars like Ertiga and Swift Desire, as well as improved profitability, lift the bottom line. The smart gains on better than expected results for the stock price. Vodafone runs into fresh trouble in India. The British telco is under the scanner of the revenue intelligence officials for violation of import norms. Top Vodafone officials face DRI grilling over alleged anti-dumping charges. Stanchart Global Director and Asia Head Jaspal Bindra slammed the central bank for its holier-than-thou approach. The new bank on new bank licenses says institutions with deep pockets should be given licenses irrespective of their corporate ownership. The much-awaited correction in real estate prices is finally here. Leading builders like Lodha and RNA start offering big discounts to attract buyers as the liquidity pressures mount. Experts say realtors have no choice but to cut prices if they want to stay in the business. Let's assess the performance on Dalal Street because that's clearly where all of the attention was. After a fairly okay start, we got on to build onto all of those gains and we certainly made up for yesterday. It was a strong up move on the frontline indices. You had the broader markets too, which showed you good traction. So by the end of the day, it was almost 2% higher for the mid-cap index after yesterday's bloodbath, and the small-cap index was higher by 72 points. All of your sectoral indices were firmly in the green. You had it largely led by all of your high beta pockets. So the Bank Nifty, well, kudos to that one. It was almost 150 points up by the day's close, and all of your banking stocks shone in trade. So apart from that, you had the Bank Nifty, in fact, which closed at the highest point of the day. Apart from that, you had real estate, autos, consumer durables, as well as the metals basket, which all did very well for themselves. Some of the big gainers, Jayaprakash Associates featured on the list. Of course, there was Bank of Baroda, which did very well for itself. Reliance Infrastructure, as well as Bajaj Auto, perked up by late trade. Some of the stocks in focus today, well, you had Maruti, which put out its numbers, but apart from that, there were quite a few from the mid-cap and large-cap arena. BEL put out a great set of numbers, surpassing the ET Now poll. Profits came in at 198 crore rupees. The sales came in at 1,440 crores, and that was high by 13% as well as 0.7% respectively, on the back of which the stock really saw a smart up move. Reliance Part, who put out a good set of numbers, the profits came in high by 30% this time around at 266 crore rupees, where the top line grew this time around to 1,464 crores versus a mere 457 crores last time around. OBC also put out a good set of numbers. The profits came in at 326 crore rupees. That was down by just about 7%. In fact, the net interest income was higher by 6.5%. Asset quality did deteriorate this time around, but largely in tandem with the way the entire banking pack panned out, OBC too saw a good up move by the day's close. Dhan Bank put out its numbers earlier in the morning, and this time around it was a great set of numbers. After seeing losses last time around, it turned into profitability, so 4.3 crores in terms of the profit versus a loss of 36.8 crores. Net interest income also came in higher by 17% at 75 crores. The gross NPAs were at 4% versus net NPAs at 2.9%. Aban Offshore, not a great show this time around. The profits were lower by 56% at 31.8 crores versus 73 crores, and the top line came in higher by 5% at 909 crore rupees. Very jagged edges, but didn't manage to scale the green line, and it was down by 1.3%. Shriram Transport, that too put out its quarterly numbers. The Q3 profits came in at 346 crores and the net interest income was higher by 11% at 894 crores, a fairly good reaction. Some result reactions from yesterday, Biocon worth mentioning. It came out with a good set of numbers. Profits at 92 crores versus 85 crore rupees and the net sales came in at 635 crores. You had SKS Microfinance that clearly cheered the streets this time around. The management also spoke about how the prospects going forward look very robust. You had the net profits which came in at 1.2%. This is vis-a-vis a loss of 428 crores and the total income from operations also, that was down marginally at 85 crores vis-a-vis 87 crore rupees. In terms of Reliance Communications, well, that saw a great run up today as it is in talks with domestic lenders to raise 6,500 crore rupees. Suzlon too was in the limelight on the upside as the formal approval for its corporate debt restructuring has come on board for 9,500 crore rupees, which includes the enhancement of working capital by close to 1,800 crores. And finally, you had some of the other index losers which came in the form of a Tata Power. Cement as a pack was very weak today, so Ultratech Cement down by close to 1.5%, ACC too adding to the woes, and NTPC was down by just about 0.6%. Well, after all the give and take this week, given the kind of volatility that we witnessed particularly yesterday, this is how the week went by. The Nifty went on to gain close to 0.2%. The Sensex rose close to just about 0.5%. But the mid-cap, that is where you witnessed a lot of beating given yesterday's movement. It was down by close to 2.6%. And the small-cap index is where you saw the maximum damage, off by 3%. Big gainers included the likes of Den Networks. You had a Suzlon as well as an IDFC which gained traction. Mid-cap losers included the likes of an HDIL as well as an Opto Circuits. In terms of sectoral indices, well, you had the auto index that was in fact down by close to 2%. The real estate index was off by 5.5%. Power 2 came under a fair bit of pressure. In terms of the only indices which held up, well, it was technology and IT, although very marginally. Kotak Mahindra Bank had a great week, 5.7%, L&T 2, ITC as well as Bharti Airtel given all of the news flow. Big losers on the Nifty, Tata Motors sulked on account of the news on JLR. GAIL as well as Ranbaxy was a big underperformer. Well, all in all, it was a fairly great day of trade, so no really complaints coming there. We managed to surpass some psychological levels on the Nifty as well. So let's get in a sense as to how the F&O activity panned out. Navneet Saluja joins in.
Well, Avan, finally a positive closing for the week. If you look at the closing of January futures today, they closed at 60.78 with 4 points premium on the spot Nifty, and during the day they added about 9 lakh shares in open interest. Well, it's a crucial week coming ahead. It's the expiry week and also the credit policy. Well, dealers are expecting if the expiry is above that level of 6,000, it'll be positive for the markets. And if you look at the options data for today, well, clearly there was a lot of put writing in the system today, on back of which you have the Nifty PCR surging to the level of about 1.12 versus the previous closing of about 1.05. On the call side, well, you saw a lot of unwinding in strikes like 6,000 and 6,100 where open interest shedding was seen, whereas on the put side, aggressive writing was seen at 6,000 level, which added 22 lakh shares in today's trading session. You also had 6,100 put strike, which added significant 8.4 lakh shares. And on the stock futures front, among the Nifty gainers, you had stocks like JP Associates and Bank of Baroda, which did well for themselves. Long positions were seen. Well, the auto pack was quite active. Maruti was up on back of its quarterly numbers. You also had Bajaj Auto with surge, so long position seen for both these two counters. On the short side, you had Tata Motors, which was down, and also the entire cement pack, which was weak in today's trading session. So you have stocks like Ultratech, ACC and Ambuja, where short positions were seen. Well, talking about the mid-cap space, you had Suzlon and Jubilant Foodwork, which surged sharply in today's trading session. Well, Suzlon was up by about 12% and Jubilant surged about 8%. Huge amount of long positions seen in both these two counters. Well, talking about the participation, the volumes were quite good. We did about 1.45 lakh crore of turnover on NSE by the end of the day.
Much Navneet for giving us all of those details. Well, some important earnings today. You had India's largest car maker Maruti, which came out with its third quarter results. The profits more than doubled this time around, and remember, this is the first quarter rise in the last 6 quarters. Sales stood at 12,361 crores. That's up over 47%. Higher export realizations and diesel car sales helped to boost the margins. Let's get in Yatin Mota, who now joins in with a detailed analysis of Maruti's numbers. Yatin, over to you.
Well, a solid quarter 3 coming in for Maruti Suzuki. We saw a revenue jump of nearly 45% during the quarter, as well as a profit jump of nearly 143% on a year-on-year basis. But clearly, the beta factor here for Maruti was the margin picture. Margins are coming in at 8% versus our estimate of 7.6%. So clearly, on the margin front, analysts have been, quite impressed because of the total operation efficiencies that Maruti has shown. Also during the quarter, we saw the realizations improving by nearly 16% on a year-on-year basis. Also, the average discount has come down by nearly 2,000 rupees per vehicle on a quarter-on-quarter basis, which clearly indicates that the pricing power is coming back to Maruti. Last 2 quarters, we have seen Maruti offering record discounts, and that has, come down significantly during the quarter. Going forward, also the management is expecting a margin improvement. So from 8% levels, we could possibly see a 20-30 basis points improvement. Everything held constant. Because of the weak yen also, there is a possible lower royalty payout going forward, and that will again help their profitability. During the quarter, we saw the tax rates, being going up by nearly 300 basis points on a year-on-year basis. But net, it has been a strong operational performance coming in for Maruti Suzuki. Expect some brokerage, upgrades coming on the stocks apart from the price target, which will be revised upwards from here on, purely on the basis of the margin performance that Maruti Suzuki has shown and the possible improvement that we'll see going forward in the coming quarters.
Okay, thanks very much, Yatin, for giving us those details. The stock of Maruti soared a good 4%. Meanwhile, in an unusual move, the Suzuki chairman, Osamu Suzuki, is on a one-day visit to India to attend the Maruti Suzuki's board meet. Now, we learned from sources that the chairman is not completely satisfied with the performance of the Indian car subsidiary, and he wants Maruti Suzuki to focus more aggressively on exports. Maruti Suzuki's second plant in Gujarat was not discussed in the board meeting as the project report is not ready. Osamu Suzuki has asked Suzuki Motorcycle and Scooters India to focus more on the domestic market. To the telecom space then, and there's fresh trouble brewing for the British giant Vodafone in India. ET now learns that Vodafone is under the scanner of the Directorate of Revenue Intelligence, or the DRI, and is being grilled for the violation of customs norms. Let's get in Ashwin Mohan, who now joins in from our Mumbai newsroom with all the exclusive details. Ashwin, fill us in on the details of this probe and what exactly it means for Vodafone, a big setback.
Well, Awan, for starters, let's keep in mind that uncertainty continues to loom over Vodafone's settlement talks with the government over its 14,000 crore tax case. That's been brewing for the last 6 years or so, and if that wasn't enough reason for worry, what we now understand is that in the latest headache of sorts for the British telco in India, we understand that they are currently under the scanner of the DRI, or the Directorate of Revenue Intelligence in Mumbai. We understand that Vodafone is under the scanner of the DRI for alleged violations of the Customs Act. More specifically, what we are picking up from sources is that the DRI suspects that Vodafone has violated anti-dumping duty norms. What we also understand is that part of this ongoing probe, the DRI has also searched the official premises of Vodafone India in Mumbai and several other places. Several top-level company officials have also been summoned and grilled as part of this ongoing probe. And what we also understand is that the probe seems to be preliminary at this stage, but it is yet to reach a critical level. But what we understand from sources is that a show cause notice is likely to be slapped on Vodafone soon. Now, we tried to get in touch with the company for an official comment. Vodafone declined to comment, but clearly this seems to be yet another bad news as far as Vodafone is concerned, because as far as India is concerned, the picture seems to be very bleak as far as their brushes with enforcement agencies are concerned.
Certainly does. Many thanks, Ashwin, for giving us all of those exclusive details coming in on Vodafone. So fresh trouble brewing for that one. Time now to get you some big voices from the World Economic Summit at Davos. Well, Jaspal Bindra, Asia CEO of Standard Chartered PLC, says he's comfortable with corporates being given banking licenses. In an exclusive chat with ET Now's policy editor Supriya Srinath, Bindra says that there is no point in trying to keep corporates away from the banking sector, as they are ultimately connected. He also added that the RBI is doing a fine job in balancing growth and inflation and is hopeful to see that trend continue going forward.
I'm firmly in the camp that the licenses should be given to those with deep pockets. And if that happens to be only corporate houses or financial institutions in India, then it has to go to those people, because it's no point sort of trying to get very holy on the line of saying, it has to go with no connectivity, etc., with business houses, because the banks eventually do end up having connectivity with business houses, whether they are owned or not owned by them. I feel quite comfortable with the corporates being allowed, and we need more banks, we need the competition, we need to grow the market. There's huge, the one thing I always sort of say to everyone is that there are 800 million mobile subscribers why could not be bank accounts?
It's been a very tight monetary policy regime. There's been a clamor for a rate cut. What should the RBI do? I mean, should RBI go ahead there, cut rates, even at the risk of inflation being very high, or should they hold their horses? How would you assess the situation?
Well, the government and the businesses always want growth, and it's their prerogative to think that way. I think the RBI has an independent obligation to manage inflation. And I think they're doing exactly that in terms of RBI is doing exactly that. There is a fine balance between where you think, inflation is hurting more than growth is hurting, lack of growth is hurting. Right. And I think we just hope that RBI will make that fine distinction in the best wisdom.
Okay, and from one prominent voice then to another, Infosys CEO and Managing Director S.T. Shibulal believes that flat IT budgets and an uncertain macro environment will continue to remain a challenge for Indian IT companies. In an exclusive conversation with Supriya Srinath in Davos, Shibulal says that it will be a while before stability returns to the world economy.
We expect the budgets to be flat or marginally down. But at the same time, I think many corporations are focused on driving efficiency, driving productivity. Some of them are starting to look at the future and thinking about how they will drive growth and differentiation in their own markets. So, but the budgets are yet to be closed.
What then has really changed on the ground, and how does one really read into your performance on the back of these statements?
So as I said, the world has not changed. In one quarter, the world cannot change. We did well in Q3. In Q4, we have decided to go with our guidance of at least 5% for the year. When we enter a quarter, we have visibility for about 95 to 96% of our revenue. But for 5% of revenue, it's 5% of $1.8 billion. That's approximately $90 million to be made up. So we are working very hard on it.
Now, a day after the Union Cabinet approved a probe into bribery allegations against big box retailer Walmart, the company's India plans have hit a new roadblock. This time around is from the Department of Industrial Policy and Promotion. Devduta Das now joins in with the exclusive details. Devduta, what exactly is the new hurdle that the DIPP has put up for Walmart now?
Well, it's very evidently the fact that they are also concerned about the kind of allegations that have been levied against the company, and that's why they want to play it safe. And they're saying from top sources in the DIPP, from what we've gotten to know, that they are unwilling to clear any proposal or any queries that come in by way of Walmart trying to get into the multi-brand retail space. They are saying that they will put on hold all queries or any application, if at all Walmart wants to submit an application to enter the multi-brand retail space via the FDI 51% that has been opened up for this particular sector. They will put it on hold till the time all the government probes are over. Now remember, the government has set up a commission yesterday to probe into charges of lobbying by Walmart. Not only that, they will be looking into whether or not Walmart paid any bribes to officials to get the several licenses that are required to set up their operations here in India for their wholesale business. Also, what is also a cause of concern is the ED probe that Walmart is under, where they are being probed for alleged violations of the FEMA Act. So until all of these probes are over, there is unlikely to be any movement from the DIPP as far as any of their queries or applications are concerned.
Many thanks, Devduta, for joining in with those exclusive details. Moving on to the real estate space, and after holding property prices sky high for a long period, builders finally seem to be biting the bullet. There are some visible signs of the much-awaited price correction in property prices, at least in some pockets. So is this the time for the fence-sitters to take the plunge? Ritu Singh finds out.
These plush apartments in downtown Mumbai have been lying vacant for quite some time now, as sky-high prices force prospective buyers from signing the dotted line. But finally, there could be some respite. Big players like Lodha and RNA Corp have taken the lead in bringing down rates, slashing prices of their new projects in Mumbai by almost 15%. Experts believe this move will help both real estate developers and home hunters.
In the market, couple of companies are offering some discount which is ranging between 2 to 5%. For example, my company has offered up to 5% discount on various projects on pan-India basis.
In fact, the writing has been on the wall for some time now. A survey by property research firm Knight Frank pegs the number of unsold apartments in Mumbai at 80,000 units, while the new home registrations have dropped by over 35% in the past 12 months. Builders admit that the much-awaited price correction may finally be here.
I think we are already in the price correction zone. Wherever possible, we have also cut our prices and offered discounts.
So far, the downward revision has been limited to Mumbai, but the trend could soon spread to other realty hotspots like Pune, Bangalore, Calcutta, Chennai and Gurgaon. Property experts say the momentum is expected to pick up this year.
I'm more encouraged on 2013 than I was in 2012. 2012 was a very difficult year for the developers. There was very little liquidity. 2013, there seems to be a buzz that has come in.
These price cuts may well be the first signs of a larger correction that buyers have been waiting for a very long time now. While on one hand, they will bring life back into the realty sector, on the other, they will also provide the much-needed cash boost for the fund-starved builders. Ritu Singh, ET Now, Mumbai.
Okay, that brings us to an end of this edition of Business Day. Thanks so much for watching. Have a good weekend.